first, gentlemen, congratulations, because you've made a lot of money for our viewers, and I think that you've done that in part because everybody knows your product. So why don't we start with you, Michael?
Sure.
You are putting together a company that will have how much aisle space in the typical store that our viewers visit?
Well, look, it's a $16 billion company, and we will have $10 billion of revenue in the U.S. when we combine these two enterprises, both of which are performing very strongly in the marketplace. So this combination happens from a position of strength, and you'll find us in virtually every aisle in either the mass merchants store, with the exception of maybe the food aisle, but you'll find us in virtually every aisle in the rest of the store, from sporting goods right through to the general merchandise section.
And can that make, I know you've got strong partnerships with a lot of retailers, but at the same time, the retailers are very powerful. This does give you a little more leverage than if you were separate from each other.
Yeah, I prefer to think of it as through scale, we'll be able to lead better the development of the categories through our retail partners. And that strategically is the ambition we would set and where we hope to leverage scale. Through collaboration with retailers to increase the growth rate in our categories and the profitability in the categories across the total enterprise.
Excellent. Now, Martin, people are used to you coming on the show and used to generating an amazing return, and I'm sure there's some of our viewers are saying, if Martin is done, I'm done. That this was just a great run. Thank you very much. I'm going to sell. What do you say to them?
I'm not done. I'm going on the board of directors of Newell. I'm going to help Mike in any way that I can. I'm leaving a significant amount of my net worth in the company. And I see a lot of upside. If I didn't see a lot of upside, frankly, we wouldn't have done this transaction. So we like the fit. The portfolios fit very well together. Mike's the first guy I've met, frankly, that has the same kind of vision that we do in driving value and how to look at scale and creating efficiencies to be able to drive product innovation. So we see a great fit. And frankly, if we were the bigger company, we'd probably be the buyer. But that's how the cookie crumbles. We're very happy, and I think this is going to be a great story for many years to come. And I think that combination just going to get you there faster. That's why we look at it.
Michael, one of the things that you've done is kind of a Newellization. It's continued from the old days in the 80s, and I remember. Are there products that you see that you'll be getting where you've already had great ideas for product extensions? Because Martin's done a great job, but maybe there's even more can be done?
No, I think both companies will be stronger by being together than they would individually apart. And there are a number of really intuitive combinations in our portfolio.
Go over them, please, because that's what our people want to hear about.
Sure. I mean, think of the combination of the leading baby gear brand in Graco with the leading feeding and soothing brand in Nook. This is a phenomenal combination in baby gear. Think about the combination between Rubbermaid and Food Saver. We're just launching Rubbermaid FreshWorks, which is a new innovation that will allow you to extend your produce life much longer, 80%
and
longer.
Waste.
And reduce the amount of produce and fresh vegetables that are thrown into and fresh fruit thrown into landfill, which is a tragic waste. But Martin's ahead of us, quite frankly, with Food Saver. It's a $250 million brand that takes a different product approach to preserving and extending the life of protein. But it's the same principle, same underlying principle. So you can go through this portfolio. You can look at the combination of commercial products and industrial products with Rubbermaid commercial products, Mappa Spuntex, and Waddington. Great synergies to be unlocked there. You can look at Calphalon partnering with the kitchen appliance businesses with Oster or Crock-Pot. And so there's tremendous opportunity across this portfolio, and the more time you spend unpacking it, the more you see. There are two things that don't really even have to do with category synergies, but have to do with cross-sell opportunities. A brand like Contigo and Avex and beverage containers can tap into the distribution power of Coleman or K2, or even a brand like Marmot to create access for these products in channels we would never otherwise reach. And so there's those kinds of revenue synergies, which quite frankly, we haven't even figured into the algorithm for this deal, that are out there as opportunities beyond what we've assumed.
Let me ask Martin, since Martin, you were on last. The market was a little skeptical about the Jostens. There was secondary Jostens. This is the Ring company, and you've been in it now, and I know a lot of people were skeptical when you bought Yankee Candle. Say, hey, well, how much growth?
I spent my whole life dealing with skeptics.
Yes, including me when we first met. Tell me about Jostens and what you've discovered and low-hanging fruit.
Well, we love the business. We think it's a very interesting business. The low-hanging fruit here is, again, the fit. It's a whole new distribution channel. When you get to a certain size, you need to keep on finding new ways of delivering your product to the consumer. And in this case, you take like the Parker Pen business. I grew up with the Parker pen. We do these mementos, and they're great for gift giving and for graduation ceremonies and things like that. That's going to be a great new conduit, great new product to put through the Jostens channel. But what have we seen since we bought Jostens? No surprises. We do our due diligence, as you know, very thoroughly. They're continuing to the end of the year to do what they said they'd do. I think they're well lined up to have growth for the first time in a while next year. And the more products we put into that channel, the more organic growth it's going to be driven. And I think that'll only get enhanced with this combination.
You know, a lot of people are going to be watching and listening about this high yield market. And they're worried about distressed high yield. You worked hard to keep it so that you did not get into that category with debt.
We've always been investment grade, and we intend to always be investment grade. We lever up a little bit here at the front end, but we quickly de-lever right to our target leverage ratio. And so we're really pleased with how the combination has worked. It creates a tremendous amount of value for both shareholders. It was important for both constituents to see the value in the deal. In year one, we'll deliver high single-digit accretion. In year two, we'll deliver high teens accretion post synergies. And in year 3, 4, 5, we'll get to strong double-digit accretion post synergies.
You do have some businesses that if you had to raise cash, you could sell them. I mean, I don't want you to name anything now. People work at these companies. I don't want to hear. But could there be, you said 80% are kind of core. Could there be some that if you wanted to raise some capital rather quickly in the first year, you could do it?
I don't think we're going to need to do that. We're going to be able to hold our dividend and increase it with earnings over the coming years. So I don't think, I love all my children. And that's where I start from when I think about brands and products. And we're going to spend some time learning and understanding Martin's portfolio, getting to know the business models, and we'll see what happens over time. Some of these combinations offer great potential, and I wouldn't make a judgment about any aspect of this portfolio for some time to come. I think we need to get into it and understand it. This is a company that will be comprised of everyday brands that deliver tremendous everyday cash flow and that have tremendous global potential.
Yeah, I think, look, we have a bad market. I think your stock would have been up otherwise. But I want to thank you, Michael Polks, the CEO of Newell Rubbermaid, and Martin Franklin, old friend, I have to call you. Not about friends, but now you'll be moving on. Chairman of Jarden, large shareholder after this. Thank you so much to both of you.
Thanks, Jim.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.